Good morning. Today is Friday the 19th of June. Let's see. First market we're looking at today is the ETF TBT, right? The interest rate play, the ultra short Lehman 20-year Treasury bond. As you recall, this white line here represents our buy area, which happens to be right in between the mid to the lower band here. If you recall, we went long at 74 even. We got a nice rally yesterday at about 75.5, 76. Took a little of it off, took a little profit there. Now we're pretty much about 4 cents underwater on the remaining portion, but that's fine. I just want to take a little bit off there. If it were to come down lower, I would say to this white line, maybe a little lower, I'd be looking to buy more. So we're hanging tough there. We've got our bigger fibs drawn from the low, right at the beginning of May to this high, right? Took out that yearly, well, a year high right there. Got our fibs, right? The 38.2 is way down here. It's actually below that 50 exponential right now. So again, I would love to see this market come down further, and I would be a buyer again. But again, I took off a little profit there to give me more room. If it were to come down even further, I'd buy more. So there you go on TBT. What about eBay? eBay is getting smacked today. After a positive opening, we've come down and we've actually taken out. Look at today is interesting, right? It opened up, actually took out yesterday's high, right? Took it out, and then automatically and quickly reversed and took out the low of yesterday. Now that typically would mean that, hey, you took out the high and then on the same day you take out the low, you'd want to be out of there. And in all reality, I should have been, but I didn't do it. And granted, the initial stop loss is lower, much lower, so I'm going to hang tough in here. What did I say yesterday, right? We went long, and this white line here represents the 53.39 buy, right? Long at 53.39, right? Stop loss is 2 points lower at 51.39, which is right here. So 51.39. So we're only risking, right? R equals risk. We're risking 2 points on this trade, not a whole lot. And that's about it. I'm not worried about this trade. If it's a losing trade, it's a losing trade. Only risking 2 points here. And I'm going to hang tough on this one. And again, the stop, though, like I said, is at 51.39. All right, so remember, that initial stop loss is below the 200 exponential moving average right here. So even though I don't necessarily like the price action of taking out the high and then immediately reversing and taking out the low, that usually means that we're going to get a little bigger move to the downside. That's usually the case, but we'll see. It's Friday, right? So we might push down a little bit lower, but we'll see. Again, we're only risking, what, 2 points on this trade. Not much of a risk. Let's flip real quickly to the daily E-mini S&P 500 chart, okay? And if you recall, yesterday we actually pushed up and made new highs, new yearly highs. The old high was 1679 3/4. We pushed up to 1688.5, almost 10 full points, and then we ended up closing at 1680 3/4, just a hair, 1 point over the old high. So it'll be interesting to see what happens today. As you can see, the volatility in here is starting to decrease a little bit. If today becomes an inside pattern, meaning we can't take out Thursday's high or yesterday's low, then we could use this as a potential selling opportunity on Monday if the market is able to take out today's low, but only if today is an inside pattern. So I'm going to keep an eye on that. In fact, I am going to put this on my little watch list here, right down here in this window here. Go at es.d. D stands for day session only, right? So I want to pay attention to this. So again, if today becomes that tight little inside pattern, then on Monday I would look for a short-term trade down through the lows, looking for a little movement down through the lows. Okay, so have a great day. Have a profitable day, and I'll be back with you on Monday. Bye for now.